Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing language of corporate filings, maybe even find a hidden secret or two. Today we're diving into Illumina Incorporated's latest quarterly report, the 10Q, for the period ending the 28th of September 2025. Get ready because this company has been through a lot and its financials tell a story of strategic shifts and ongoing challenges. Make sure you are subscribed and join our Discord community linked in the description if you love breaking down company reports. So what is the big picture Illumina, the giant in genetic sequencing, is navigating a world of changing regulations, a pending acquisition, and the lingering effects of past deals. They are a provider of sequencing and array-based solutions for genetic and genomic analysis. Let's jump straight into the financials, starting with their balance sheet. Looking at their balance sheet on the 28th of September 2025, we see total assets of about $6.177 billion, down slightly from $6.303 billion at the end of 2024. Their cash and cash equivalents stand at $1.05 billion, which is pretty healthy. On the flip side, short-term investments are up from $93 million to $228 million. This might indicate they are holding more liquid assets or possibly preparing for the acquisition we will talk about later. Liabilities show current liabilities at $1.96 billion, up from $1.54 billion. This increase is largely driven by a jump in term debt current portion from $499 million to almost $1 billion. This means a significant chunk of their debt is coming due soon, adding a little pressure to their short-term finances. Stockholders' equity is pretty stable at $2.381 billion versus $2.373 billion. Now let's talk about revenue performance from their statement of operations. Total revenue for the 3 months ending the 28th of September 2025 was $1.084 billion, very close to the $1.080 billion from the same period last year. This stability, however, masks some underlying shifts. Product revenue stayed flat at $927 million, but service and other revenue saw a dip from $166 million to $157 million. This is a trend we see continuing over a longer period, with year-to-date revenue down from $3.268 billion to $3.184 billion. The decline in service and other revenue is particularly noticeable, especially when you consider the spin off of Grail Incorporated in June 2024. Looking deeper into product revenue consumables, revenue saw a small increase from $807 million last year to $816 million this year, which is a good sign. Instruments revenue, however, saw a mixed picture, up slightly in the quarter, but down for the year-to-date comparison. This suggests customers are being more cautious with large capital equipment purchases. For their core Illumina segment, revenue was basically flat year over year. However, the impact of events in China is clear, with revenue in Greater China down significantly. Their gross profit, which is revenue minus the direct costs of producing goods and services, was $733 million for the quarter, down slightly from $745 million. The gross margin percentage for the quarter is 67.6%, which is a respectable figure. However, year-to-date, gross margin is at 66.3% compared to 65.3% last year. This improvement is largely attributed to the Grail spin-off, which removed lower margin revenue from their books. Operating expenses show a significant decrease in research and development by 9% for the quarter and 20% year-to-date. This decrease is mainly due to cost optimization efforts, including lower employee-related compensation and share-based compensation. Selling, general and administrative expenses increased by 16% in the quarter and decreased by 4% year-to-date. The quarterly increase is largely due to an unfavorable impact from remeasuring their contingent consideration liabilities, primarily related to the Grail contingent value rights. Now, here is a number that definitely stands out. Last year, they had a massive $1.889 billion goodwill and intangible impairment charge. This year, that charge is zero. This was a huge factor in their large operating loss last year. In a positive turn of events, their legal contingency and settlement line item shows a significant improvement. Last year, they had a large gain related to a legal settlement. Now that is zero. This means they are not dealing with those one-time items. Overall operating expense has seen a dramatic reduction year over year. For the year-to-date period, it dropped from $3.141 billion to $1.505 billion, a reduction of over 50%. This is largely due to the absence of the massive Grail impairment charge from last year, and also due to cost-cutting measures. It's crucial to remember that a large chunk of last year's operating expense was a non-cash impairment. Looking at other income and expenses, their total other expense for the quarter was $7 million compared to $21 million last year. The year-to-date figures show a swing from a significant expense of $358 million last year to a net income of $103 million this year. This improvement is mainly attributed to gains on strategic investments and a favourable swing from last year's significant loss on their retained Grail investment. Their income tax provision is a bit complex. For the quarter, they had a provision of $70 million, resulting in an effective tax rate of 31.8%. Year to date, the provision is $193 million with an effective tax rate of 27.2%. This is higher than the US federal rate of 21% due to various factors, including changes in tax legislation and a significant valuation allowance recorded against certain deferred tax assets. The bottom line net income for the quarter was $150 million, quite a turnaround from last year's loss of $1.41 billion. This represents basic earnings per S-share of $0.98, almost triple last year's figure. Diluted earnings per S-share also saw a boost. Now let's check out the cash flow statement. Net cash provided by operating activities for the year-to-date period was $758 million, a good increase from $473 million last year. This shows their core business is generating more cash. Investing activities used $163 million year-to-date. This primarily includes capital expenditures and investments in strategic initiatives. Financing activities use $681 million. This is heavily influenced by significant share repurchases totaling $700 million for the year-to-date period. They are actively returning cash to shareholders. Overall, cash and cash equivalents decreased by $77 million for the year-to-date period. This is a result of their investing and financing activities outweighing the cash generated from operations. Let's touch on a major event, the spin-off of Grail. On the 24th of June 2024, Illumina completed the separation of Grail. They distributed about 85.5% of Grail's shares to their own stockholders. They still hold about 14.5%. This move was designed to streamline their business and focus on their core operations. And speaking of strategic moves, on the 22nd of June 2025, Illumina announced an agreement to acquire SomaLogic Incorporated for $350 million. This acquisition is expected to boost their presence in the proteomics market and is a significant step in their multi-omics strategy. The deal is subject to regulatory approvals and is anticipated to close in the first half of 2026. Illumina holds a retained investment in the spun-off Grail, which is valued at $228 million. This investment has seen some ups and downs with a significant loss recognized in the prior year. Their debt situation is something to watch. They have about $2 billion in term notes outstanding with varying maturity dates. The current portion of this debt has increased significantly. They also have a $750 million revolving credit facility, which remains undrawn, a good sign of their liquidity. Looking at equity share repurchases are a big theme. Illumina authorized a program to repurchase up to $1.5 billion of its stock. In the quarter alone, they repurchased over 1.2 million shares. This shows a commitment to returning capital to shareholders. Illumina is involved in several significant legal proceedings. There are shareholder derivative complaints related to the Grail acquisition alleging breaches of fiduciary duty. Federal and state securities class actions have also been filed related to statements made about the Grail acquisition. These are complex and ongoing matters with uncertain outcomes. The company denies the allegations and intends to defend itself vigorously. As of the 28th of September 2025, Illumina has one reportable segment, Core Illumina. Previously, they had the Grail segment, but with the spin-off that is no longer the case. This segmentation helps understand how management views and manages the business performance. Now, for my take, Illumina is clearly in a period of significant transition. The spin-off of Grail and the pending acquisition of SomaLogic Signal, a strategic pivot towards core sequencing and multiomics. On the positive side, their operational excellence initiatives are yielding results with reduced operating expenses and a strong cash flow from operations. The reduction in R&D and SG and a spending in certain areas indicates a focus on efficiency. The share repurchase program shows confidence from management and a commitment to shareholder returns. However, there are risks. The debt load, while manageable, is something to monitor, especially with a significant portion coming due. The legal proceedings related to the Grail acquisition pose a risk and their outcomes are unpredictable. Also, the geopolitical landscape, particularly concerning regulations in China, continues to present challenges impacting revenue. The company's reliance on customer capital spending in a potentially uncertain economic environment is another factor. Overall, Illumina is navigating a complex business environment. They are making strategic moves to strengthen their core business and expand into new areas like proteomics. While they have made significant progress in cost management and profitability, the ongoing legal matters and market uncertainties mean investors should approach with caution. The success of the SomaLogic acquisition will be a key indicator of their future growth strategy. Alright, that is our deep dive into Illumina's latest report. What do you think about these financial shifts and their strategic direction? Let me know your thoughts in the comments. If you found this analysis helpful, please hit that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching. See you next time.